ground as a company in terms of the jurisdictions we operate in, and then we also, of course, are available to in the stock markets. So we don't have a one size fits all, but that's, I think, a sort of good overview of who we are.
Thanks, Luis. So Andy, turning over to you, just so everybody obviously knows Nasdaq, but can you give us maybe an overview and maybe outlining some aspects or services that may not be all too familiar to the rest of us about Nasdaq?
Yeah, sure. Nasdaq is a seasoned, globally recognized exchange. In the U.S. market, you have kind of two dominant exchanges. We're a few decades old. Our competitor's a few hundred years old. But if you look at the Nasdaq Composite, which is an index of our 3,200 plus companies, which are both domestic and international, like Almonty, that index has outperformed any major world index over any extended time period. And then if you look at the representation of our market, all different sizes and industries, we are a huge player. If you look at the 10 largest companies by market cap in the world, 8 of them are Nasdaq listed. The top 7 are Nasdaq listed. The only 2 that aren't is Saudi Aramco, listed in Saudi Arabia, and Taiwan Semiconductors, which has an ADR that is listed on our competitor. We do really well with IPOs. We have won by count, like an 80% capture rate, and proceeds raised for the last 7 years. So looking proceeds raised, all the offering amounts of those companies moving to from the private to the public forum. In aggregate, we're the #1 U.S. exchange there. And then we're also #1 in terms of number of listed companies and volume traded. And then the last, I guess, bullet point is certainly a deep pool of investor capital in the U.S. markets, but also our top 100 companies by market cap are bigger than our competitor. So thanks for the time.
Just briefly, Andrew, what's the percentage maybe of companies listed on your exchange that are also duly listed elsewhere around the world? Do you have that data, or?
Yeah, I would say it's probably around 10%, which is pretty close to our competitor. So yeah, the local home market is kind of the primary location, but companies see the opportunity to add the U.S. listing, and there's certainly rewards to that. There are some costs and extra work, but certainly rewards, which we'll go into more detail on this call.
Exactly. Okay, so that's easily a few hundred companies that you have that are duly listed across the globe. So that's a significant component.
With a large component, Guy, from Canada, right? That's one of the stronger.
Excellent. Well, you kind of read my mind as to where I was kind of going with that. So that's good. Thank you for pointing that out. Okay, so let's dive into it now. Luis, I'm back with you now. Okay, can you take us through what initially triggered Almonty to say we need a U.S. listing? We need to be duly listed. Walk us through that process from the beginning, and we're going to walk forward into that.
Well, I think every company has a different motivation. My decision to do it was really born out of the sort of changing geopolitical nature of the cycle, of the sector that I'm in. So it was during the last administration. I made the decision in 24 that it was time to migrate into the US. We have most of our customers are US. We're working already with US defense. I live in the United States, and it was a natural progression to come into the market because I believed that I could see increasing tensions between the West and, of course, China and Russia over raw materials, and I wanted to ensure I was in a market where I had an elevated level of protection. No disrespect to Canada. I've been in Canada for many years, but I felt that the American system was probably more geared up to offer protection to companies that are trading there, as well as the fact that in my particular sector of commodities in Canada, outside of gold and marijuana, it seems, there's a lot of commodities that aren't terribly well supported, even though our liquidity was one of the highest for a junior miner at that time on the TSX. So it was really a combination of looking for greater visibility, greater liquidity, and the protection that being listed on the US through the US government would afford us. So that was the nature of it. Was it well supported in Almonty? Well, my Canadian shareholders didn't like the idea very much. Their concerns were born around there's additional litigation risk, liability risk. We need more D&O insurance. They started to sort of go into a panic about the fact that from a regulatory point of view, it's a lot more burdensome. There's a lot more scrutiny. At the moment, if you make an error on a press release, you can talk to the OSC and work through it. And in the US, the SEC are going to just put a hood on your head and take you away. So there was quite a lot of resistance from my Canadian team. From my US directors, they're very supportive. So it was really one of those decisions. I thought, well, I think we have to take the emotion out of it. We have to make this commitment to a vision that I saw for the company. In terms of board support, I think once I had been able to explain how we already conform to the highest standards of scrutiny because of our lenders are all state development banks in Europe, so we were already compliant across the board. They took much greater comfort in that. I think that was important to talk people off the ledge, that you're not walking into a litigious circus where sneeze on the wrong person and you end up with a class lawsuit. It's a bit of a myth. It does happen, but I think as long as you operate at a very high level, but you accept that that's a potential issue and get your directors comfortable with it, I think that was an important hurdle to cross. What I would say, though, is that the process and the journey is not for the faint-hearted. It is expensive. Lawyers salivate at the prospect of doing this. It's very important your lawyers have representation both in the US and in Canada, given that the rules are similar but very different, if that makes any sense. And I think it's also very important that you don't just arrive. I mean, you can have great liquidity and great visibility in Canada, but if you think you can just sort of arrive into the US market and sort of say, I'm here, no one's going to care. It's very important to come in with a banking team. They are motivated to ensure that the powers that be are familiar with who you are, what you're doing. They will, drive the greatest IR, which is, analysts into your story, because analysts are the most effective tool because they're actually liable in the US. So, analyst coverage in Canada, if against makes a mistake, oh, well, let's have a coffee and some coffee and forget about it. But in the US, the analysts are really on the hook for what they report. So they're very diligent. And I think lastly, and probably most importantly, is the sector that you're in. If your sector is not front and center in the US, you could be the greatest, pharmaceutical company in the world. But if no one cares about pharmaceuticals in the market at that time, you're literally going to struggle to gain any type of attention. As Andy said, there are 3,200 companies. It doesn't seem a lot, but it is a lot when you're trying to garnish liquidity. And I'm not talking about valuation, that your value can go up and go down. It's about liquidity. It's about bringing people in and out of your story on a daily basis. Liquidity is the driver of all things you do as a public company. It's the only way. I'm a significant shareholder and owner of Almonty. I've put millions of dollars of my own money into it, and I see value as driven through liquidity. If you're doing a good job, it's good liquidity. If you're doing a bad job, it's bad liquidity. But that's the benchmark you have to meet. To attract that liquidity in the US is the biggest, I think, examination you must do. Do I have the right banking team? Do I have potentially then the right credible analyst coverage? And am I in a sector that is relevant at that time for the, in the US markets? This, I think, was something which I felt in 2024 when we decided to do it. We could tick those boxes. I'd assembled a good banking team. I'd put together a good understanding of the US market. Commodities becoming more and more relevant. And when the iron is hot, you strike. And I think it's a very opportunistic move. It's not a solution move, it's an opportunistic one. And if you do your job properly, you can essentially see, we've seen our liquidity in Canada has increased after the listing in the Nasdaq, but we're trading 4 or 5 times what we trade in Canada on the Nasdaq. I think you have to know that, like all great things, being good at something is only part of the story. It's making sure that other people know how good you are at doing it. And otherwise you are going to spend a lot of money. The legal fees for this are going to push $5 million at least if you're using a tier 1 firm. And that's the other question as well. There's no penny pinching in this journey. You can use a lower level law firm, but then that's going to restrict your ability to attract higher level bankers because it's all about liability. So, we use Norton Rose. Yes, they all were flicking through boat catalogs when I made the call. They knew exactly what they were going to turn me over for. But they were a tier 1. They are a tier 1 firm. That gave instantly more credibility and more reassurance that the due diligence journey was being undertaken correctly to the bankers, who in turn felt more confident to the analysts. So it really is, you have to consider liability. It's all about this. This is the one thing that they worry about here in the US from a banking perspective, and of course an IR perspective, because you can have a shareholder hold you liable if they feel you didn't represent what you were talking about correctly. And I think that's the biggest component that's never really discussed. You've got to use the best teams to do it. They're going to absolutely gouge you like you wouldn't believe. You're going to be hugely upset at what they're going to charge you. But when you look back and you say it was absolutely worth it, as long as these other boxes are ticked, you've got a good team, good banking team, you've got good visibility, your sector is relevant at that time, and it's purely opportunistic. So I think that's my sort of very high level of the process. The process is relatively straightforward if you're already an AIF. You're already filing an AIF. So as a foreign reporting issuer, there's I'm not an expert in this, but there is an agreement between the exchanges between Canada and the US, whereas a Canadian fully listed TSX company, you can actually slide in many areas quite simply from a regulatory point of view into the US for a dual listing. And that's an important component. If you didn't have that, it would cost you a lot more in legal fees and it would take you much longer. But I can't remember, there is a special term that the lawyers would use.
MJDS, Lewis.
That's the one.
Yep.
So
yes.
it certainly makes it a far simpler process from a regulatory point of view. As an investor myself, first and foremost, the liquidity was what I was in pursuit of. It's not that Canada didn't have good liquidity, but it didn't have rock star liquidity in my sector. And that's what I chased, because I knew that if I could, as the song goes, make it there, I could make it anywhere. And I would say that not everyone can drive that liquidity. I've seen, stories, I've seen companies that have come in and it has not worked as anywhere close as they would hoped. We, on the other hand, we went into this, with a very strong momentum and a lot of preparation work. We decided in the summer of 24, we listed in July of 25. So I spent, the paperwork, it's 3, 4, 5 months, 6 months maximum, but I spent 6 months preparing, getting the right teams, getting the right bankers, laying the groundwork, thinking about presentation of the company. That investment of preparation cannot be, underrated. It's absolutely essential. You're coming into a giant ocean of capital. And every one of those 3,200 companies is fighting for attention. The more prepared you are, the more ready you are, and not just rely on trading on your past successes, the more I believe successful you can be. But it's really, no one really knows the outcome. So that's I think my best high level answer to that question.
All right, there's a lot of material you covered there. We even went on some other topics, but what I take from this is team. You needed a rock solid team. Is liquidity was not necessarily the main driver to get you there. Oh, am I quoting you correctly?
I sought the liquidity in the US markets, but the team and the message was the most important, part to fill before even contemplating chasing that liquidity.
Right. And the other aspect that I picked up on is when you say you need to be in a sector that draws attention. Your analogy to a pharma. If you're a pharma, but no one wants to hear about pharma, you can be the best pharma out there. You go a little bit unnoticed. Was the sector that you're in, tungsten, less appealing at that time? It now is. But
at the time it was, but I could see, I've been in this sector for a long time. I could see the geopolitics really starting to get very tense over raw materials. So I did what every CEO of a public company shouldn't do. I said but I'm also the largest shareholder, so I have that luxury. I took that risk. I measured a risk reward. I said, you know what, this is going to get really, this is going to get a very dynamic market very quickly. And I want to make sure that when it does, I'm sitting in the biggest ocean of capital that exists. So you also have to measure and understand your market to say, this sector is becoming more and more relevant. Let me get in front of it. And then when the capital starts to turn its attention, you're basically one of the few people that are there, that is available. That also is part of it. There's that risk decision making that has to be made.
Okay. Last question before I go to Andy. Were you speaking to investors who were saying, I'd like to invest in your company, but TSX, it's difficult for me to trade through TSX. I want to get in, but I've got some not irritants, but I have some hurdles that I need to cross, and that prevents me maybe from investing. Were you hearing a bit of that before?
No, but you bear it, because anyone who says they can't invest in the TSX, quite frankly, is a moron, because it's really easy to invest in the TSX. But there are a lot of funds, mutual funds, and larger pension funds in the US who don't have a mandate to invest outside of the US. So it's not a question of the TSX. They can't have capital deployed externally anywhere. They can only deploy through the US markets. So that's a very different dynamic. No one was saying to me, "Oh, I'd love to invest, but I can't because I can't go in the TSX," because I just never got phone calls like that. But I am very aware that there is a large pool of capital in the US that cannot actually, under their own mandate, invest outside. But then it's the same in Canada. There are pension funds who can't go outside of Canada, and the same in Australia. So this is not unique. It's just that the size of this capital in the US is much greater than all the others combined.
Right. Right. Okay, that's good. Thank you. Really, really good. Okay, cognizant of time. Turning to Andy now. So, Andy, okay, many things that Lewis touched on that I'm sure you want to talk to. Can you tell us roughly, broadly, what are the requirements? How does the filing process work? Walk us through that. If someone calls you today and says, all right, we'd like to embark on a process.
Sure. So for a Canadian issuer, they have an option of listing with an offering like Lewis did in creating that liquidity event, or just registering and listing. So they almost every TSX, TSXV, or CSE company has this over-the-counter trading that exists. It starts when they become public on the TSX, where a broker gets a request from an investor to want to buy shares in the U.S. And they create this over-the-counter market. So that it becomes the listed security, whether you make it a registered listed security on Nasdaq by just wrapping your annual report, and which is typically not reviewed by the SEC, or if you do an offering component like Almonty did, where they wrapped a Canadian shelf, I believe, in an F10. In both those cases, if you're meet the multi-jurisdictional filing status, which is the SEC has made it a lot easier for Canadian companies to register and list versus other international companies. Other international companies, if you're from Europe or Australia, you have to file an F1 if you're doing an offering component, or a 20F if you're just registering your annual report, and that is reviewed by the SEC. So you're looking at a 4 to 6 month process, easy with that comment period with the SEC. And as Lewis indicated, because of that back and forth, you're going to have higher legal costs. With the MJDS, the multi-jurisdictional filing status, they made it easier for Canadian companies, where as long as that 40F or F10 is filed correctly, then it's not reviewed and it can go effective in a matter of days. So in Lewis's case, I think the filing of the F10, hitting the roadshow for a week or so, and then placing the offering and listing. For other companies, it's the filing of the 40F. It's not typically reviewed. A couple of days ago, it was effective, and then listed. So examples of mining companies that have done the 40F process: Blue Moon Metals, a few $100 million market cap; Santa Cruz Silver, over $1 billion market cap; Royal Company, over $1 billion market cap over the last couple of months. Anafield, a smaller uranium miner. So those have all just done the registration and didn't have an offering component to the listing. So looking at it historically, about 2/3 didn't have the with the listing. They may have done the later, but not initially. The other third had the offering component. But whether you do the offering or not, there's this liquidity event that occurs. Even just listing without an offering, you can really see that U.S. volume increase day one, and then ongoing, it can start to challenge even the Canadian volume for companies that have cross-listed. That over-the-counter volume within 12 months is 10x to what it was before. Some had an offering component, but most of them didn't. In terms of the Nasdaq listing process, it's easy. Most companies, the balance sheet is there. The one element that I would put focus on is the share price, because there are sometimes, especially in the mining space, through as a public company, you've issued out shares, you create a little bit of dilution. The share price may have gone down. In Canada, you like low price stocks, we like higher price stocks here in the US, but we can list a company with a $2 US share price for 90 consecutive trading days, or $3 share price US for 5 consecutive trading days. And then there's the $4 normal. So sometimes companies will do a reverse stock split to get them to the $4 price and then place an offering simultaneously. But our review process, in most cases, once you file with the SEC confidentially or publicly, that's when you put in the Nasdaq listing process, and we're kind of moving in tandem. If there is an SEC review, if there's not, you're front loading us, we're doing the review, then we're indicating there's no issues here. You can go ahead and file that 40F or F10 publicly with the SEC. The longer form, if you're under 75 million, the market value of the public float, you have to do that F1 or the 20F, which you just go through that SEC review process.
Interesting. Okay. So should you file your confidential prospectus first with the SEC, or engage with you, or do both pretty much concurrently?
Yeah, so if you've got the above the 75 million market value of the public float US, and you can utilize the short form, the faster track of MJDS, then you would draft the 40F or F10 with your counsel, which is easiest to wrap around your annual report or wrap around a Canadian shelf. Put in the Nasdaq application, and then at the end of the process, file the F10 or the 40F. Because it's typically not reviewed, it'll go effective quickly within a matter of days.
Okay. Okay. All right. Louis, sorry, you're on mute, Louis.
It's important to also add to that with that route, it's the OSC that reviews the prospectus, which is a 2 to 3 day, operation. And generally, because you're doing any raise in the US, it's a relatively light review. And so this is important. If the SEC has to review something, it's a much longer journey. So even though, Andy said you don't have to do a raise, I strongly recommend that you do it as you come in, because then you've got a banker, you've got an analyst coverage, you've got all the good stuff, and you're sort of launching with a bang, and you're able to take advantage of this area of a much lighter and much quicker review than perhaps if you were doing it directly with the SEC.
Excellent. Okay. You both talked about how trading overall on both exchanges kind of improve. There's greater trading simply because it's not 1 + 1 = 2, but equals 2.5 = 3 maybe. Have you experienced that?
Yes, I mean, our liquidity in Canada was already good when we came in. It's got better since we've been in. It's probably increased in Canada, probably by about 50%, 40-50%. But in the US, we're trading 4 to 5 times that. So we certainly have seen, I don't know whether it's a spillover through arbitrage. I don't know whether people are tracking what's going on in the US market. I don't know. Of course, we trade, actually not far behind Canada in Germany, a daily as well, and we don't know if some of that is arbitraging into the TSX. So it's unclear about how all of these markets are linked, but we certainly saw an increase in liquidity in Canada after we listed in the US.
That is very interesting. Very, very interesting. Okay.
And Guy, we see that across the board. So it's not a cannibalization of volume shifting from Canada to the US. You're getting a dramatic increase in the US, and then you're also gaining in Canada. Probably, even if the companies didn't add the US listing on Nasdaq, they probably still would have had an increase in volume because these companies are performing well. That's why they're looking to add another listing location that's very visible and a deep pool of capital. So they're on that trajectory. They're doing well. So let's increase investor access and visibility. And those companies are doing well anyway. So even they didn't add the US listing on Nasdaq, they would have probably still saw an increase in volume.
Mm-hmm. I think a lot of people on the audience here are pretty interested by that fact. And we'll take good note of that. So speaking, Louis, you explained and you went over how it can be a very costly exercise, but it seems like the benefits are there. How would you rate like the cost benefit analysis, Louis, and then maybe Andy as well?
Well, I think I think it's worth pointing out that the cost comes from legal. Nasdaq, our dealings with Nasdaq were everything is a negotiation. So there's no. We found with Nasdaq there wasn't one size fits all. There's certain parameters you have to adhere to, and then everything else is a process of negotiation. And I like that about the Nasdaq. Was it worth it? Yes, absolutely. I mean, we've gained the visibility that no one else in our sector has. Yes, okay, we were already the leaders, but now a lot more people know about this. We have a lot more generalists in our stock. We have access to capital that we would never even contemplate remaining on the TSX. So for us, it has been and continues to be absolutely worth it. But I think, the TSX, when we went from the venture exchange up to the TSX a decade ago, there's a very set of rules that you adhere to, and you're in the TSX. The Nasdaq is much more, I think, or in many ways, much more commercially orientated. You can discuss everything. I mean, not obviously the limit 75 million, all these things, but I'm saying the relationships, the different services they offer. They seem to be far more invested in ensuring you succeed, because if you succeed, they look good. It's the American way. So the TSX is a much more stoic organization in that regard. It's much more conservative. And so, I think if you've got the energy and you're saying, okay, we're going to take this company now to the next step. We're going to, of course, keep our footprint in the US, and regulation is something you have to consider. We're still a foreign reporting issuer, but at some point this year, we've clearly said we are going to be moving over to US GAAP and dropping our foreign reporting issuer status as we redomicile into the US, even though we will maintain our TSX listing, which is important. We don't intend to drop it. We have good friends and good followers in the TSX, but we've certainly been drawn much quicker into the US market than I expected.
Interesting. That'll be good feedback I can potentially relay to my company services colleagues and listings colleagues on the TSX side.
Don't suspend me. Don't. Listen, I know in Canada they bear a grudge. So no, I'm just being honest. We've had no problems ever with the TSX. But it's not as dynamic as Nasdaq. It's not fighting for the success of their issuers, because that obviously is what determines their success. That's what draws capital. Right. And I saw this in Korea. We have a big operation in Korea. At one point, the Korean market was extremely dynamic. There was lots of liquidity. Everyone was very excited. And then the Nasdaq and the US market started to really shine, and you saw so many outflows of capital from Korea into the US market. That dynamic, relationship with their issuers, I think, is really key. Capital inflows or outflows.
Any word from you, maybe, on cost benefits?
Yeah. So, as Lewis did with Almonty, you had that offering component. So there is going to be higher costs with the offering. You get the underwriters and additional legal fees there related to the offering. If you're not doing an offering with the listing and you're just registering and then listing, it's lower cost there. But across the board, and Lewis touched on it, it's a dramatic increase in directors and officers insurance. We're more litigious here in the US, and you've got to increase your coverage there. So your premium will go up. And if a company's looking to do this might be a good time to kind of shop that coverage, right? Because you want to make sure that you're not paying for too much, you're getting the right amount of limits in terms. So I think that's one of the number one cost items. From a listing fee perspective, we're very reasonable in terms of what we charge companies. The benefits we've touched upon, just to kind of give you some numbers, the US by far is the deepest pool of capital in the world. 50 to 60% of the total world market capitalization resides in the US versus 2.5 to 3% in Canada. Even China is like a distant second of 8% of the total world's market capitalization. It's really here in terms of the benefits, but as Lewis indicated, you got to be ready. You got to have the right story technology, assets, resources that's going to be appealing to those U.S. investors, and then also continue to perform because the U.S. market will reward you like they've done with Almonty, but they can also punish you, right? You're on a more visible scale. You're going to add additional sell-side analysts that are here in the U.S. that want you to be U.S. listed for them to write coverage. You've got some institutions that might not be restricted investing you in the TSX, but they want you to be U.S. listed. You're hitting their radar screens, and certainly the retail investors are going to notice you more when you have that U.S. listing.
Yeah, very true, very true. Okay, before we move to the next topic, let's pause a second. Any questions out there that you want to ask and join in? Just open up your mic or camera and. Okay, none for now. Good. All right. Let's do some we're 15 minutes away from wrapping it up. Let's do some rapid fire questions maybe. What were maybe, Louis, the biggest hurdle challenges you needed to overcome? And maybe I'll tie it in with another topic we have, which was about preparedness. Was that a big also undertaking, a big task to get your disclosure in line, your governance in line, to get you to embark on this, journey? I call it like it seemed like a year-long journey. What were your challenges? Were they before or were we during the process? And I'll end with this. Were there challenges that were unforeseen? You landed on things and you said, oh my God, had I known about this before, it would have been helpful.
Well, I think if you're listed on the TSX, you're already filing, an AIF, and so therefore the compliance and regulatory side of it is relatively straightforward. You're basically almost there. The AIF, if it's done properly, is essentially the short form prospectus. So that wasn't the issue. I think the biggest worry for me was we felt in our sector in Canada we were a big fish, and we were now, jumping into an ocean. And so it was knowing or building this team. How do you get banks who are inundated with ideas and proposals and get the right bankers? I mean, you can find there are tier 1 banks, tier 2 banks, tier 3 banks. Is finding as a new entrant in this market tier 2 banks. You're shooting for tier 1 wirehouses like Morgan Stanley and Goldman Sachs. It's not realistic, unless of course you're Air Canada, and even then they probably scoff at the idea. But getting a good team of tier 2 banks who believe in the story and will support it. It's holding your hand in those early days. That was the biggest challenge. Did we have the right team, and were they going to be able to hold my hand? Because if you look at what happened to me after the IPO, my stock fell off a cliff because the rules in SEC say that for 30 days, you cannot do anything. You can't make any announcements. You can't do any PR. You have to sit there and watch your child get abused, which is exactly what happened. And I was less than happy with the lead banker at that time. But like anything, I've survived in the junior mining space for many years. I dusted myself off after 30 days and we got the stock back on track. So that's, this is not it's not seamless, this journey. Nasdaq are great at holding your hand, but there's only so much they can do. It's the team. I can't tell you enough. Don't cut corners on the team. Find the right bankers, pay them what they want, find tier 1 attorneys. Don't take a chance in being left in the middle of the lake without a life jacket.
Mm-hmm. Quality of the team and finding the right team. I can truly understand that that's a big challenge. Andy, what maybe are requirements, processes in along the way that you see companies struggling with most as they embark on this dual listing project? Where are the potholes more often that you see?
Yeah, I mean, it's a little bit more work if you're below that 75 million in the market value of the public float US. So it's a longer process to go through the SEC review, which means more attorney fees. And then you're also a smaller issuer, right? So, you don't have maybe the business built out as of yet, and maybe you could be more vulnerable, right? You're going to have more costs to add the U.S. listing, but also if you only have a small pool of revenue to work with, and you really haven't expanded your asset base, you might not get the attention in the U.S. market that you desired. So maybe you need at least 100 million market cap, excluding insiders, first to kind of go through that shorter, faster review process, because it's going to be a little bit more work if you're on the smaller side, because it is a full review, and then also you've got to manage that cost as a smaller company. The other item I would see is if you're doing a reverse stock split, just navigating the timing for that. Even Almonty had done a 2-for-3 to kind of get the share price up. I think you priced the offering, Lewis, at around $4.50. It's now $14.50 stock. So not something worrying about now, but at the time, just kind of adjusting that share price to meet either the $2 or $3 or $4 requirement to start with. So there's a company.
But Andy, to throw it in, we did a half reverse.
Okay.
And what happened? Something happened in that which we didn't contemplate.
Okay.
When that happened, some of the ISIN number changed, and in Germany that meant that you could no longer buy the stock; you could only sell it through the TSX, and we saw basically a real wobble in the whole stability of the liquidity with that reverse, because we were trying to do a reverse and then go straight out the gate. And what we didn't know was that in Germany, for instance, the European banks take at least a week to update the ISIN. And in Australia, because we have a listing on the ASX, in Australia, we had to actually apply for a new ticker symbol to actually do it. It got quite complicated. We didn't know this at the time. I'd forgotten about that, and you just reminded that misery came into my life. So that was you've got to be careful with that reverse split. Greater analysis has to be done about the ripple effect if you already have other listings outside of the TSX.
Yeah, great point. And in terms of even on the over the counter, you have to file paperwork with FINRA to do that reverse stock split. So Guy, to go to your question, and my response is just thinking logically on that. How soon do we do that in the process? Do we do it during the review process of Nasdaq in a few weeks before we list, or if we're going to do it near the time of listing, as Lewis indicated, making sure you're ahead of all these potential challenges?
Okay, two things I want to say. First of all, as you list, you'll need a co-transfer agent. So now I'm wearing my TSX Trust hat for a second. So your current transfer agent has relationships with U.S. transfer agents, whether, as we do with corresponding former colleagues, actually, or you've got a business entity on the other side of the border. They all work seamlessly. So your co-TA has to be in the process early on. Okay, so when you said, Lewis, for 30 days you're like blanked out, you can't say a word to the market. All the IRO friends here that we have, they must be sitting on their chair and wondering, ready to jump and wanting to say, to get the good story out about the strategy of the company out to the market. If you can't do it during that window, do you then do it like ahead of time? How much is their IR preparedness to address the market and speak to the market before you list?
Well, this is when you do a raise. If you don't do a raise, that I don't think that actually qualifies. It's when you come into the market on the back of an offering, there's this 30-day cooling off period straight afterwards. So the company has to stay silent. What you hope is you do a green shoe in the raise, and the lead banker defends the stock, because obviously you've sold out at a discount in the offering, and people are sure, the usual, machinations of an offering when you're a new guy on the block. Of course, if the banker doesn't actually do a defensive of the stock, you have to sit there and just take it. There's nothing you can do. So I think we did a lot of work in the run up, getting the message out there, getting the story out there, why we were listing, when we were coming, what our plans were. Then we took the heat. Remember, we listed over summer. So summer is normally a lower liquidity time. Perhaps we could say we could have timed it better, but these things, you never know. It also means that when people started to return to work in September, in late August and September, our stock was down after those 30 days. It was a great buying opportunity. That's how we sort of repositioned. But, you have to know that for 30 days, you got to take your hands off the wheel, and you have to rely on the team that you brought in to try and defend.
Did you have to prepare specific IR material for the US market, or what you had in terms of a communication strategy already in place was used? Was it the same messaging, or you had to
same messaging? We were a Canadian company doing a dual listing, so we very much sort of leaned on the fact that we are a Canadian company at that time, and that was, we were just doing a dual listing, and that allowed the IR company to use everything that we'd already done in Canada across the border.
Okay, so the US investor base wasn't necessarily focused on other parameters or key metrics of your company necessarily than other investors you already were speaking with.
Yeah, we were already compliant essentially with the SEC, regulations. So the US investors that came into the IPO, the offering that we did, were comfortable, because we're not the first, Canadian company to do this, and we won't be the last.
Right. Okay. Speaking to that, in fact, other issuers, Andy, what do you see in terms of an IR messaging and IR preparedness? What do you see with other issuers? Is it pretty much along the same line as how Lewis approached it?
Yeah, I think that a lot of Canadian companies that are looking to add the U.S. listing, they start guiding the investor community that they're heading in that direction. They might start to include that in presentation materials, put out a press release. So, they've probably had interactions as Lewis did with investors, certainly vetting the board, but speaking, would it be a benefit to add a U.S. listing? Would that be advantageous to you as an investor? So I think they're having those conversations and building into it. And the investor base is maybe looking forward to that listing. If you have to do a share consolidation, you're going to most likely announce you're doing it to gain the U.S. listing on Nasdaq, and hopefully, there's no market reaction, or maybe it's even positive. Yes, this is going to be exposing themselves to a larger investor base, and that's a positive step. So,
but Andy, I would add, in fact, I don't think you can ever say a reverse split is positive. The market always punishes you for it. So our view was that you got to treat it like a smash and grab. You got to do everything quickly and instantaneously. Reverse offering out the gates, and that way you're ripping the band-aid off. If you try and take it up, in my experience of doing this, I thought if we did it over a longer period of time, this process, you do a reverse. I mean, I know the bank wanted me to do a reverse split like a month or 6 weeks, some crazy time before it. I said, you're out of your mind, because we're going to get, it's just going to trade down, because people know there's an offering coming. That's really the signal. It's like a flag to the short sellers. So for us, we made the decision, we've got to just really do everything very quickly, get everything ready, and then just launch.
Sure. Yeah. Shortening the window, as Lewis indicated, is key, because maybe they're not selling you down because of the reverse stock split announcement. It's more, potential dilution in the offering,
Yeah.
right? Will they price it at a discount to market? And why should I buy it at this level if they're going to maybe incentivize the market with the offering and do a 15% discount or whatever it might be? But reverse splits usually are successful if the company's performing well, the stock is kind of upward sloping, so it has some momentum behind it, and then your smart money investors feel the stock is undervalued, and they're going to be there with those limit orders to buy if some retail investor thinks that's a signal every time to sell the stock.
All good. We're almost at the hour. Closing remarks, one or two liners, Louis.
I think if you have the energy and you have the enthusiasm and you're looking to really jump into the biggest, capital pool, and you think you're up to it, I would do it. I wouldn't even hesitate. I've not had a regret since we did it. Of course, things have worked out very well for us, but they could have gone the other way, and I may be saying a different thing at that point. But I think you just have to make that choice to say it's going to be hard work. You're going to be highly scrutinized. You're going to cop a lot of flack from all kinds of people. You got to stay the course, execute it quickly, and take the chance if you feel your company is can stand up to it and shine. That would be my advice. And squeeze Andy for discounts. You'll get them.
Yeah,
Andy,
other than
over to
squeezing
you.
me for discounts, I echo everything that Louis said. U.S. by far is the deepest pool of capital in the world. It is a cost-benefit analysis, so make sure you can manage those costs. And if you're performing well, it can reward you. It is a lot more work in terms of the bandwidth of the management team to interact with the U.S. investors. It's another regulatory body that you work with as well. But if the idea is that we're going to grow this company and we have a real good story here, and the U.S. investor space is a larger group of investors that would embrace that story, it's something you should at least think about.
So I take from what you both said, preparedness, quality of team, not for the faint of heart, as you said at the beginning, Louis. And the cost benefit analysis seems to be positive. So well done, congrats to you, Louis. Andy, great stuff to support Canadian issuers wishing to list. Who knows, on the panel, on the audience today here, there could be some who are at that stage of determining if they want to take the plunge or not. That concludes it for me. Bruno, over to you.
Thank you, Guy. Thank you, Louis. Thank you, Andrew, for that very informative session. We really appreciate, and thank you again for your support and collaboration. And I want to thank everybody for attending today and looking forward for our next event. Thank you all. Have a good day.
Thanks, Bruno.
Thank you.
You very
Take care.
much. Thanks,
Have a good
Andy.
day.
Take care.
Thanks,
Bye.
Louis. Bye-bye.
Bye-bye.
C'est un gars d'un Nasdaq. Andrew, c'est un gars de Nasdaq. Je connais pas tant de trucs. Moi, je connais les noms. Mais, puis, c'est long, dans les derniers jours, au début, mon au début, j'étais sur le pape. Puis après ça, tu sais, l'agent français n'avait pas grand-chose à apprendre. Ben, honnêtement, je t'ai parlé 30 secondes, puis... oui, c'est... Oui, quand tu as demandé des questions, moi j'en avais une. C'est quoi qu'il faut comme mec, Andrew? Rien. Voilà. Je pense que je t'ai pas posé une question. Mais, tu sais, ils m'ont dit ça va être avec le CEO de Almonty Industries. C'est écrit ça, Almonty. Tungstène. C'est quoi ce tungstène? Métal rare. Supposément hyper prisé. En passant, je sais pas si vous avez vu une petite action, là. Je voulais dire. US. $US. A company called Almonty, Almonty Industries. Tungsten. C'est pas c'est super rare and precious metal. They were a venture client at $2 or something, another $2. 18. C'est vrai, parce qu'avant le Nasdaq, c'était ouais. C'est pas comment ça s'appelle là? Non. Ouais, mais t'as vu, puis ça, moi, en fouillant sur eux, là, j'ai regardé leur circulaire, j'ai regardé le site web, conseil d'administration, l'équipe de direction. Pas grand-chose. Pas grand-chose. C'est là, je me suis dit, est-ce qu'on fait une vidéo? Qui ont été bons. On n'a pas de plus. Somebody knows somebody. Ouais, c'est ça. Ouais, c'est ça. Le gars de Nasdaq, là, il va avoir des appels, là, parce qu'il y avait beaucoup d'émetteurs quand même. Hein? Moi, j'avais beaucoup de difficultés à entendre. Le son est fait avec le cheveu. Je ne sais pas si moi je parlais fort. Les bouts, là, quand il parlait de 13F pour je l'écoutais, puis je manquais la moitié des chiffres, là, puis une chance qu'il ne peut pas répéter. C'est bien, parce qu'en pour moi, c'était bien, parce que ça revient un peu à des choses que tout le monde peut comprendre. C'est ça. C'est ça. J'ai failli plugger Northern Rose. Il y a plusieurs émetteurs sur la ligne ici qui prennent Northern Rose. Fait que, ils n'ont pas besoin de mettre. Ils font en masse d'argent, d'autres, sans que j'en rajoute. 25? OK. Parce qu'il y en avait, je pense, une cinquantaine d'inscrits. Oui, j'ai vu ça. Ouais. Non, c'est bien. Non. Non. Je vais dans la pandémie, je l'ai fait une ou deux. C'est cool, là, quand même. Ouais. Il y a la conférence nationale cette année en juin qui est assez souvent. Là, c'est au Québec. Puis là, on essaie d'avoir des conférenciers de renom qui sont en train de bâtir là, fait que moi, j'ai comme dit, excusez-moi, je ne veux pas un modérateur. Vous êtes mal pris, là, vraiment mal pris. On a demandé à un, à l'autre, personne ne peut, Guy, on n'est pas lié avec toi. Là. OK, pas de règle. La conférence, c'est fin de semaine? Ouais, ça commence tout le temps le dimanche soir. Le dimanche. Ouais, dimanche. Ça commence le dimanche soir, opening cocktail. Tu sais, nous, on est souvent. On était avant, on est vu, on était en exposant aussi. C'était un kiosque. T'arrives des fois à aller ici. Sinon, tu arrives dans la journée, opening cocktail, reception, puis là, souvent, tu vas faire un souper avec dimanche soir, c'est le fun. Lundi, c'est des sessions toute la journée. Le lundi soir, c'est souper organisé par Simon. Mardi, des sessions jusqu'à vers 3 heures. En fait, c'était censé être à Saint-Sauveur en 21, je pense, 2021. 7, 19, je pense, cette date-là, ces jours-là. Toi, déjà, tout le temps. Ouais. Ben, tu sais, Siri, pour moi, c'est ça. C'est comme, ça me force pas, là. Tu sais, des fois, là, je vais à Pidac, là, dans 2 semaines. Ouais. Ça va être du travail. Ça, c'est vraiment du travail. Tu sais, là, pas tellement là. Mais bon. Il y aura ouais. Honnêtement, tout le monde. Tout le monde est là. Vraiment, c'est la place pour rencontrer. Puis, tu sais, le hall d'exposition principal. Puis, qui est assis, tu prends un kiosque. Moi, je fais dans le kiosque. Mais, tu te promènes dans les allées comme ça, puis comme ça, là, tu sais, là. Puis, tu mets la journée. Ta deuxième journée, tu le refais encore parce qu'il y a du monde que tu ne peux pas plus voir. Voilà. Plus, il y a des sessions à l'extérieur, puis lorsque, comme des CEO presentation, une demi-heure, tu sais, c'est comme 20 minutes, puis si tu arrêtes 5 minutes, clean la salle, remplis la salle, à 1h30 puis à l'heure, ça commence, puis c'est un CEO. Fait que t'en as plusieurs salles, puis c'est tout aux demi-heures. Fait que, pourquoi tu te dis, oh, lui, c'est un client, je vais aller vendre dans aussi. Je fais un nouveau monde graphique, avec des journées tout le temps là. Fait que, tu peux participer à ça. Puis l'autre affaire aussi, tout. Fait que moi, là, c'est vraiment le dimanche. Dimanche, moi, je prends la fin de 10h du matin, j'arrive dans le qui va super, puis le cocktail. Tu sais, je vois avec les 3 collègues à ton office, Steven, Kevin, puis Scott. Fait que, tu sais, tout le temps, des fois, c'est pas là pour tout le temps, on se sépare. Des fois, il y en a 2, tu sais, il y en a qui sont en même temps, on se sépare, on se rejoint plus tard, puis on va aller chercher ça plus tard. Un commence à 4h30, l'autre commence à 5h30. Parfait. 4h30, on est là, sharp, tu sais. 5h30, 6h, OK, we're done. À la fin de la soirée, ils sont comme ça. C'est vrai pareil. C'est vrai pareil. Dimanche, lundi, mardi, là. Moi, la première chance que je marche jusqu'à l'hôtel. Mais tu sais, le lendemain, il faut que tu refasses le plancher puis tu reparles à du monde. Puis je refasse du kiosque. T'étais-tu là, toi, pour travailler?
À la moitié, puis j'avais un autre appel à.
Ah, OK. So pretty doing that. They don't want to go in and then leave. Ouais. Moi, ça paraît pas.
Je trouvais ça drôle quand c'est écrit Bruno de Genova.
C'est lui qui m'a dans la blast from the back.
C'est exactement ça.
C'est Benoît.
Regarde tout ça. C'est fait, puis j'ai pas fait honte à personne, je te parle.
C'est le contraire.
J'avais une joke,
failli pile. Ouais, ouais. Fait que le gars de Nasdaq, tu sais, au début, tu sais, la toute première question que j'ai posée, la deuxième question que j'ai posée à lui, c'est OK, explique-nous l'origine de votre décision d'aller. Tu sais, j'avais un bon 10 minutes là, avec lui, tu sais, de back and forth. Ça a duré ça, c'est bien grand. Puis là, après ça, avec Nasdaq, je lui ai donné du temps d'antenne aussi. Fait que lui, tu sais, j'avais dit, qu'est-ce que tu veux que je te pose? Fait qu'il m'avait écrit 5-6 questions. J'ai posé des questions qui m'a dit, ce sont des bonnes questions que. Parfait. Ouais. Ben, on s'était parlé juste 10 minutes avant. On s'était plus que 10 minutes.